Good evening, guys. It's Saturday, April 8th. My name is Dave Coker, and this is Talking About Finance. And my gosh, what a great week we had. The S&P 500, the NASDAQ, and the Dow all finishing up. A great week and a good evening, guys. It's a happy time, isn't it? It's such a great time to be long equities and to be practicing dollar cost averaging. Buying dividend-paying stocks, the stocks we like at the prices we love. Lots of fear in the markets presently, lots of retail investors dumping stocks, but we don't feel that. Men and women of strong will, strong control over our emotions. We create a plan and we stick with the plan, investing only for dividends. We sit back and collect dividends. We use that cash flow to buy more dividend-paying stocks. It's a simple technique that anyone can do, but few engage. Why? Most people are impatient. They want to get rich quick without much effort. Well, you can do that. It's called a lottery ticket. But in the stock market, you ask? No. Odds are you'll just lose money. But still, people try it. And often, sadly, it's because they bought a course. They bought a book. They bought a newsletter from some self-appointed guru that just got in the markets a couple years ago. He or she, of course, is a fraudster. I don't mince any words. But let's not badmouth the morally challenged, who take money fully knowing they can't deliver, that they are fraudsters. Let's talk about a more positive topic, finance and the markets. The S&P 500 closed up on the week 1.34%. We see 6 sectors: communication services, healthcare, utilities, energy, consumer staples, and real estate all outperformed the S&P 500 on the week. 5 sectors underperformed. 3 still made a profit, but less than the S&P 500. They're to the right of the S&P 500 bar there. Specifically financials, information technology, materials, consumer discretionary, and industrials all underperformed. So all in all, it wasn't a bad week. But we're still working through lots of issues with interest rates, inflation, war, wobbly banks, lots of things going on. So let's not get carried away by opening new positions or adding significantly to existing positions. Stay calm and focused until we get some clarity. The VIX traded down to 1840. It closed last week at the week before at 1902. So things are looking good. Perhaps too good, considering the VIX. I still suspect this rally we're seeing is going to falter and perhaps reverse as Q2 progresses, and then we're likely to see the Fed cutting interest rates. So do what I do. Invest, but be cautious. The 10-year note closed the week at 3.3%. It's down 0.2%. 20 basis points week on week, down 0.6%, or 60 basis points year to date. The next FOMC, the Fed Open Markets Committee meeting, is on May 2nd and May 3rd. So in a little over 3 weeks out, we're going to get some clarity, and plenty of stuff can happen during that time. We've seen incredibly amazing amounts of stuff just happening in 1 week. So we got three to go. Oil closed the week at 80.46, up about 6.3% on the week. Now it's up about 0.2%, 20 basis points year to date. Guys, lots of chatter about rising oil prices causing a recession. Please look at the data before you babble. Every recession since the 1970s in the United States has been preceded by an absolute doubling of oil prices. Can it do so from $80? Yeah, anything can happen, but it's not clear if it will. American shale producers haven't increased production yet, so it's possible for there to be a sharp rise, but 100% rise? Nobody really knows for sure, but we do know this. If oil does increase 100%, it'll likely be because of a severe exogenous shock, something totally external to the oil markets. So don't worry about it. Just keep on keeping on. Stick to your plan. It's what I did last week. I bought stocks this week. I used March dividends. And yesterday was Friday, so yes, I am a creature of habit. I did buy Bitcoin. I did buy Ripple. It was Friday. What am I supposed to do? I can't go to the pub in the morning. I got to go to work. So I get up about 4, typically buy Bitcoin 4:30, maybe 5 o'clock, head off to the bank. I was working at the bank that day, head off to the bank, work a few hours there, go to university after that, and then, I don't know, come home, get the wife, go to the pub. That's what we do. In any case, guys, investing is a long-term game. Don't expect immediate gratification, but gratification is coming, and it's increased because of time. Time to build a passive income for yourself. Time to invest. Time to relax. Time to collect dividends. Time to reinvest dividends. And time to get rich slowly. It's far better, far more reliable than a lottery ticket, that's for sure. And you ain't got to pay anybody, least of all me, for a course or a book or a newsletter. It's all here. So now I'm going to show you what me and my buddies, passionate about profits, all of us, have been talking about all week. We are Global Wall Street. We dominate the city of London. We dominate Wall Street. We are absolutely everywhere. And everyone either knows someone or knows someone who knows someone. We've got our fingers in absolutely everything. The stuff I hear is amazing. We talk all week on a private Telegram channel about the markets, about the events, about the people that make all this so fascinating. And this evening we got 7 slides for 7 days. So let's go. All right, now big tech, guys, is booming, but you got to be aware. Don't fall into this trap. This is fantastic because I have seen this mindset where people are piling money into big tech, and it's like, my God, don't do that. You know, for diversification, they're telling me, oh my God, don't do that. Please, please, please. Definitely have exposure to big tech, but do not be putting all your wealth into big tech. Really, really, really. You don't have to take it from me. We know what's going on when we take a look in the markets, or we take a look at the players in the markets. Why are venture capitalists reverting to levels of investment that we've last seen in 2019 or so? Why? Because they know something weird's going on. They've gotten enough money invested in there, and they're trying to draw back a little bit from exposure to that sector. Because something's going to happen. We're going to see a drawback in the markets. Tech is incredibly volatile. These are definitely high beta stocks. Market goes down to 1%. High beta stocks go down far more than 1%. So be careful there. Do not be piling a lot of money into tech. In fact, save your money, buy dividend-paying stocks, and create yourself an income. It's what we call FU money. Now, guys, I'm not like you. I know what you're thinking when you think of FU money. Here's the story, right? You got a boss who's a total jerk. They ride your butt 24/7, giving you a hard time. Finally, you've had enough. You want to quit. You can't quit. You were a fool with your money. The more you made, the more you spent. Going forward, you're going to build up your own dividend stream. You're going to have FU money coming in. Think what you want. Call it whatever you want. I call it fed up money, but I know some of you call it something else. This way you can walk into the boss and say, I'm fed up. Oh, and F you too, if you want to say that, right? But you do need that type of approach to build your own income stream, guys. It's incredibly important. And we were also talking on the channel about Perkins' most recent book, Die with Zero. Really interesting guy. I agree with a lot of stuff in this book. A couple people read it and posted their summaries. And you know, the thing that's really cool about the book is that he says you should focus some of your income on experiences. And I've always been that way. I tend to like to buy experiences rather than stuff. We live, my wife and I, markedly below our means. Yeah, but we do things. We have lots of interesting experiences. And his idea is that you give away money to charity. I give money to charity. You create positive energy that way. And just go into his book. He's got 8 simple rules. And if you embrace these rules, and I found out that I tend to do all of them, you'll be okay, guys. It's part of the reason why I'm so happy, I suspect. But it's a really fascinating book, and definitely it's something that is worth, I think it's about $8.95 on Amazon. I haven't read it yet. I haven't even bought it yet. I definitely will at some point. Although I'm really cheap, guys, to be honest with you, I know it sounds contradictory, right? I like to put these things on a wait list, a watch list, and then see if the price goes down, and it almost always does. Although you'll get a snarky email from Amazon that you got 4 hours or 6 hours or 24 hours to buy it. Then you'll have to be prepared to hop in to take whatever discount they're giving you. So that's what I'm waiting for it to go down. But yeah, die with zero. In other words, do everything you can with your money. And we know that a lot of people are actually doing this inadvertently. And I can't remember the person who put this in the channel. Really, really interesting when you take a look at this. We know during pandemic, a lot of people in the States got a lot of money from the government, and people who didn't need it. I got money from the U.S. government. I didn't need it. I didn't ask for it. I didn't want it. Well, I took it. But we also know that that gave rise to a huge bubble. There were a whole bunch of jerks investing in stocks and calling themselves traders because they didn't realize when the entire market goes up, you can buy any stock and make money. Same thing happened in crypto. But then it all came for naught. In 2022, we started to see things collapsing. In 2022, markets really cratering in 2022. And now we're starting to see, guys, that the money's running out. And yeah, by the middle of this year, you have to pick up the research note and read it. They're basically talking third quarter, that money is going to be gone. What's going to happen to consumption? Remember, the U.S. economy is driven by consumption. About 70% of the U.S. economy is consumption. So what's going to happen then? Yeah, the economy is going to slow. Remember we were talking about interest rates being lowered second half, third quarter, somewhere around there? Yeah. Stocks cratering? Yeah. It's all likely to happen. Keep the faith, though. Don't worry about it. It's not the end of the world. Just don't pile all your money in on stocks like we were talking about. Hold some money back and make sure you invest in dividend-paying stocks, and you'll be fine. Oh, and this is really epic. Check this out. Switzerland's fifth largest bank, it's state-owned, it's a postal bank, has been approved, I should say, by the Swiss government to offer Bitcoin trading, yawn, but custody services. And you know, if you read my blog, FinTech Flash News, you know that's one of my pet peeves. I really don't want to be holding all this Bitcoin I've been buying. I want a bank or a financial institution to hold it, a brokerage perhaps. We've seen Fidelity in the States take baby steps towards holding crypto. They're doing it for institutional investors now. But Postbank is now approved to do this in Switzerland. They got about 15 million accounts. Not sure how many of them will hold crypto or do hold crypto. But since you can purchase it through a financial institution, and since that financial institution can hold it, they can engage in custody. Yeah. I kind of think we'll see some uptake there with Bitcoin. But regardless, we got this pattern. And again, guys, this is just what happens. This is what Bitcoin does. 3 up years and a down year. 3 up years and a down year. 3 up years and a down year. I didn't do this graphic. I would have gone back a little bit further, just studied it, but not sure who did it. What do you think is going to happen in 2023, guys? Well, Bitcoin is doing quite well so far this year. I've been quite happy with the sharp run-up, about 70%. I'm not complaining. Same thing with Ripple, but let's leave Ripple off the table for the moment. Guys, if you don't have Bitcoin, you really, really want to buy some Bitcoin. All right, guys, that's it for this evening. It's been a wonderful pleasure. I hope you're going to have a great evening, a good weekend, holiday tomorrow. And if you're in the UK, we got 2 more days of holiday, Monday and Tuesday. Head to the pub. I'll be writing research notes. And I'll be pushing some through Medium. If you're coming in through Medium this evening, I wrote one today. Well, actually, I wrote it a couple days ago, just posted it on Medium. Got a couple more to go. So I'll be pushing some research notes through Medium. And I've got another one I'm writing for a banking client. Oh, and I'm doing a lot of interviewing these days in the city. My banking clients, they found out I've got a strong AI background. And so I've been interviewing AI consultants. 2 clients in particular. My God, they've been driving me crazy with the amount of work they've been throwing my way. It's good. Not complaining. Just an awful lot of people. They're hiring an incredibly large number of people. Yeah, there's a big hiring spree right now in Wall Street in the city of London for AI consultants. So I'll be doing some CVs, some shortlisting, maybe tonight. Nah. We're just out in London to the pub. I think we're going back out to the pub. Beautiful night. Take care, guys.